This is Robert Kraft, and I'm coming to you live on SNN Live, and we're here at the SeeThruEquity Annual MicroCap Healthcare Investor Conference 2016 in San Francisco, California. With me right now is a familiar face. We're doing a Wall Street View with Chris Lahiji from LD Micro. Chris, welcome back to SNN Live.
Thank you for having me.
Of course, it's my pleasure. So, to get started, where should we start? You want to talk about it's a new year, it's 2016. Tell me, what's your assessment thus far in 2016?
Well, it's kind of a continuation of last year, and last year was abysmal on many, many different levels, for us included. Very, very few guys made money in the microcap space, and even if you look back at 14, very few guys made money. So it's just really, it gets old after a while to just keep repeating the same stuff over and over again, as in things are bad. Liquidity is dried up, stocks are down, and what was interesting is for the first time now we know exactly what the smallest names are doing. Since September 13th, this was a close at year end, the Russell was down 2.5%, the LD Micro Index was down 7.5%. So it wasn't the small names doing poorly, it was the smallest names doing the worst. And of course, this year, the first 10 days have been really bad. It just seems like people are selling and not really caring what they do at this point. They just want to kind of get out and do, invest in other things.
But what do you think is the reason why? Is there something inherently wrong in microcaps?
The April of 2009 was when I got married. And April of 2009 was also essentially the bottom of the abyss. And what was interesting is that some gentleman pointed out that September of 15, this is just a few months ago, was the lowest dollar amount of volume microcap has traded since April of 2009. What's even worse is that the number in September of 15 was 30% lower than April of 2009. So that is right then and there just a very small, essentially a microcosm for why things are not going very well. You have a lack of liquidity. You have a lot of names testing multi-year lows. You don't have a lot of new names coming out, and obviously because the conditions are really tough. And it's one of these things where, selling drives selling. You had a lot of tax loss selling that impacted the index and a lot of microcap names, but once again, you have to be disciplined for the long term. There are a lot of good ideas out there. There are a lot of great ideas that are essentially trading under tangible book, under book value, under free cash flow metrics. But at this point in time, there is a lot of apathy. No one cares. I have $1 to sell you for 50 cents. No one cares. So I'm hoping that this eventually turns itself around. I think 16, you're going to get a lot of buyouts. I think there's going to be a lot of interest from the private equity side, because you are essentially buying a lot of great companies for, pretty significant discounts.
That was where I was going to follow up with, actually, because usually when they're, everyone's apathetic and there's a lot of selling, that always sometimes is an opportunity for a bargain.
Well, yeah. Well, the thing is that, look, if you loved it at $3, you'll really love it at 50 cents. It's just like, it's always hilarious to me how CNBC, and I don't want to, parody them, but I will. CNBC is like the markets have gone down for 7 days. Market goes up a little bit. Oh, there's profit taking. There is no profit taking. So for microcap at least, I think it's on a company by company basis. But at this point in time, I just don't feel like there's any real catalyst for companies to move higher unless they absolutely crush earnings. Like Meet Me. Look at Meet Me. Ticker symbol MEAT. Stocks at a 52-week high. Numbers came out great number of unique.
Full disclosure, are you a shareholder?
I am not. I used to be a former shareholder of Meet Me, no longer. But for the most part, if you have a good story, the word is still going to get out. But out of 2,000, 3,000, 4,000, 5,000 names, I can't name 5 or 6 Meet Me's.
We talked about this last year, and it's an interesting concept because it seems to kind of be taking hold, and that's this consolidation, where these companies are now starting to realize, okay, this is because I think there's been so much more awareness in the sector, they're now starting to realize these are the things that real investors in the microcap space are actually looking for.
Look at 2009 and 10. Look at how many buyouts there were. Now, the question is, if a company gets taken out or merges or goes private, are they going to give any real value to the shareholders? And the problem with 2009 and 2010 were they were basically getting bought out, but no one was giving really any premium to book. So it'll be interesting to see what happens this year, but I can also really sympathize with a lot of public company CEOs where it's like, why are we not getting the respect that we deserve? Maybe we should just make that phone call and get bought out. Because now these bigger companies are looking for ways to grow top-line revenue. And in many cases, you can only grow so much organically. If you can't grow organically, you got to buy your competitors. So 16 will be a very, very telling year. And, I'm just hoping to stay afloat, because if it's down, this will be the third consecutive year where the space is down. I don't know how many people will survive this, come December, where we're down another 10, 15, 20%.
So, for the average investor, even for the investor that might be new to the space and still sees an opportunity, what would your advice be to them looking ahead throughout the year?
MicroCap is not meant to be, you cannot put your entire net worth in a space. Whether it's silver bullion, baseball cards, NFL playoff gambling.
That's everything I'm in.
Right, exactly. Pokemon cards like me. You just cannot. You cannot, put more than X amount of your eggs in one basket. So MicroCap is meant as a hedge. It is not meant to be like, ha ha ha, I have 165% of my net worth tied in this space. So as soon as the LD Micro Index or the Russell 2 goes down, I will be on the streets. You can't have that. It should only be a small portion of your overall asset mix. For some people like me, it's more because this is what I do for a living. So my risk is greater. And no one has ever said, by the way, that there's no risk in this. There's a ton of risk in this. In many cases, I advocate going to Vegas and playing craps and baccarat and all this stuff, because after a while, even if you lose, they give you free stuff. No one gives you free stuff on the street. So my take is that you have to look at it from a very, very long-term period. If you look at the history of MicroCap, you've made a lot of money, okay? The last few years have been very telling and tough. We will get patches like this. But if you believe in something and you believe that it's undervalued, you got to stick with your guns. Ultimately, value always rises to the top. Just like frauds always get discovered, real value always showcases itself in the end.
Okay, so that's a great overview, but now I want to get to something that we brought up a little bit earlier in December, and that was the launch of the LD Micro Index.
Yes.
Tell me a little bit about that.
We're getting creamed. It's not fun to look at. So we started this thing in September 13th, and it started at 2,000, and it went to 2,050, and it's like, wow, this thing is going to go to 5,000. Maybe a couple days where it goes down. And since that day of like 2035, it's been rough sledding. We're at 1730, 1720 right now. For the year, we're down probably 6-7% already. And unfortunately, even when volume rises, there's more selling than buying. So my consensus is a lot of people are throwing in the towel, and they get frustrated because they look at Amazon, they look at Facebook, they look at Google. They see these companies go up, every day, and they're like, why the hell am I holding on to these smaller companies, waiting for them to be discovered? I might as well just sell them and make money elsewhere. So you have a lot of that, and I think that what makes us so unique is the average market cap right now is about 70 million. When we started, it was 85. So already you're seeing it slip. And, it's still early. It's been a few months, but I think the data is incredible. And I think that this will be a very eye-opening experience for everyone, including ourselves, where we rummage through all this new information that's coming out for the very first time in our space, and it's like, it's even worse than we think. So hopefully the next time I do an interview, it'll be on much better terms. But as for now, the breadth has been very negative. The selling has been relatively deep, and there's just not too many indicators that are hitting 52-week highs or all-time highs right now.
So for the index, what's the criteria for the index?
10 to 300 million, North America, TSX, OTC, NYSE, and NASDAQ. 2,500 companies, and you have to hit a certain volume for I think for a 90-day period. So I believe you have to trade $10,000 worth of stock for roughly a 90-day period to be ultimately inside the index. It'll be recalibrated twice a year. Our next calibration will be in February.
And okay, so I wanted to get back to one thing that we were talking about earlier, and this is the problem with a lack of new issues and a lack of new ideas. What would you say is the reason why?
It's very simple. I mean, it costs a lot of money to be a public company, and you have to basically file every 3 months. And I think it's one of these things where, as a private entity, you have a lot more flexibility. There was interest in someone taking LD Micro public, and I thought that was a terrible idea because now instead of having to worry about our finances once a year, I have to worry about our finances 4 times a year, plus the additional cost of going public, plus the scrutiny that they put on your numbers. So it has to be worth the risk reward. The index was essentially created. I mean, this going back to this. The index was essentially created to really get a accurate measure of what's going on in the smallest names. And you really didn't have that before. The Russell 2 is fine, but the average market cap is over $1 billion. Russell 3, I think, is around 750 million. So we had to essentially create a benchmark in the space. Our goal this year is to unify the space because we like to think of ourselves as an independent organization. We don't really have any biases. We want to make sure that this data is available for everyone so they can come up to better conclusions. The buy side left in MicroCap has to have a benchmark, and so does the sell side, and so do all these companies. So now companies can finally see what they did in a year and compare it to their peers. So my take of all this is the index is looking very carefully at new listings, and since September 13th, I can't name you more than a few. So this has kind of been in line ever since I think 12 or 13. It's been it's kind of been a graveyard, but I'm hoping that things change.
So another question I had is, well, one, it's industry agnostic, so you're covering everything.
Everybody.
And also on that topic, what do you think some of the industries that are maybe driving it down right now, and also maybe some industries to watch?
Energy. So if you go to index.ldmicro.com right now, you will have a column just dedicated to sectors. So, and no one has done this before in this space, which is even more surprising. So, in this case, communications equipment and energy were absolutely destroyed towards the end of the year. I think consumer did a little bit better than most, and then industrials was also flat. But every single day, you can now finally see where money is coming into MicroCap, where it's leaving, and then what sectors are doing better than the others.
Okay, so where can our audience go and find more information about LD Micro, the conferences, and then also the index?
Index.ldmicro.com, and there's going to be a big change in the website sometime this year. And I also have to give a shout out to SeeThru, which we're here today. I mean, these guys, Ajay and Amit, have done an incredible job trying to keep this candle lit. I mean, there's not too many guys out in this space that are good guys and then want everyone to do better. I mean, SeeThru is one of them. So it's gonna be a tough year again, and we're just gonna have to try to weather it out.
My name is Robert Kraft, and I'm coming to you live on SNN Live, and we're here at the SeeThruEquity Annual MicroCap Healthcare Investor Conference 2016 in San Francisco, California. With me again has been Chris Lahiji from LD Micro, the LD Micro Index. Chris, thank you so much for coming on.
Thank you, Robert.